On All About Stocks this week, firm close on the Lal Street with the Nifty ending above 84.50. We'll tell you what your investment strategy should be. Sharmila Joshi joins us in the studio. She talks about why you should be investing in DCB Bank for the long term. Welcome to All About Stocks. This show is meant specifically for long-term retail investors. It's been a volatile couple of weeks for the global markets. We have that Greek crisis that's looming large. Also, there's, the Asian markets have been weak as well. We're going to find out what all of this means for your stock. So as a retail investor, if I'm looking at my portfolio, should I be worried about what's going on across the world? What sort of an impact will it have on my money right now? That's what we're going to try and find out over the next half hour. Remember, you can send in any question you have to the email ID that's at the bottom of your screen. But first, let me bring in my colleague Ajay, who will give us an update on all the market action. Ajay.
Well, the Indian markets have gained for a third straight week. Surprising strength witnessed on Friday, that too ahead of the weekend where Greek referendum would take place. And look at the composition of the market. The interest rate sensitives were clearly leading from the front. Banking, stocks, power, utilities, even capital goods had a very good week. Not only that, the broader end of the market has become particularly buoyant in the last couple of days. Well, the FIs have also been selective buyers in trade for this particular week. DI selling is not very accelerated. They have also been buyers on select days. So liquidity situation remains very good. RBI commentary, in fact, at one of the press meets have clearly indicated that probably the worst for monsoon is over. The fears are receding, indicating that probably there could be a rate cut in the offing. And of course, at a time then when earnings season is lined up for next particular week, estimating that probably worst is over, traders chose to go into this event long. In fact, that's the reason why we're talking about third straight week of gains. So going forward, traders believe that dips should be bought, and the markets are actually heading higher from current levels, from 8,500 levels, which it has managed to scale up to in last three weeks. So net, the Greek referendum, the way it actually swings, and also how the earnings season start panning out from next week will lead the market direction in the near term.
All right, Ajay, thank you for that update. Joining us in the studio, Sharmila Joshi, who's been advising us with our stocks now for nearly 3 years. Sharmila, thank you so much for coming in. Of course, the big question that I'm going to ask you is, if I am a retail investor at this point, we know that, there's so much going on in the global markets, and there is a certain amount of coupling. There will be a certain short-term reaction in our stock market. But in the longer term, should I be worried about what's happening across the globe?
Well, I mean, yes and no, because I think some of the situation in Greece, for instance, we need to see how that plays out. Because at the moment, you're not really expecting any contagion the way you had earlier. And I think markets are sort of discounting that already to some extent. But you need to really see how things really proceed from here on. Also, I think as far as the domestic situation is concerned, there are still a lot of unanswered questions. We are at the start of earnings season. Yes. Monsoons is still to play out. Plus, I think we have an important monsoon parliament session which could get derailed. So even I think domestically things are not perhaps as optimistic. You won't be as optimistic as you were, say, maybe 5 or 6 months ago. So obviously from a very longer term perspective, if you're talking of like a 12 to 18 month kind of a view, then I wouldn't be worried. But in the near term, yes, there could be, by near term, I mean for the next 3-4 months, you can expect volatility, markets to be volatile to a certain extent.
What advice are you giving your clients right now? If I were to come into your office and say, listen, I'm really worried about what's going on, please tell me what to do with my stocks. What would you tell me to do?
Very honestly, the first thing is that I would say that your investment horizon has to be at least 12 to 18 months, especially if you enter now. And where your existing portfolio is concerned, review it. And if you see there are some stocks which have fallen off, then maybe you could average those if they're good stocks. And if they're stocks which, well, you don't really want to hold on, but the price is wrong again, in terms of selling out, then stay put. But otherwise, you take that call that if you think that this is not a stock that's going to go up in a hurry and you'd rather switch and take advantage of a lower stock price in a better stock which could go up more, then you need to do that kind of trimming as well. So I'd be very, very stock specific in short.
Is there anything you're buying at this point?
Yeah, lots. I think, as I said, there are a lot of stocks that have corrected deeply. For instance, you've had IT correct very deeply because of, the earning, the warnings that companies have issued. So you've seen a bit of a fall there. Then I think autos is a very interesting sector because I think that's the sector that's going to do well. in the short term. So if you don't have an exposure to that you need to.
Why will auto do well in the short term?
I think the numbers there are improving, and I think that if you have a good monsoon and a lower interest rate cycle, then it's an obvious good point in time to get into autos if you aren't there already. So as I said, autos I think makes a lot of sense. Similarly, I think there would be specific stocks within the FMCG basket. By specific I actually mean that you ignore the absolute frontliners and look at the rest of the basket and pick and choose from that.
Could you give us a name within that FMCG?
I think I have one in my portfolio. I think I have Dabur, but other than that, I also like an Imami.
Okay.
I like a Marico Kaya. So I think a whole host of stocks, Godrej Consumer.
And between auto and IT, which you also said you prefer at this point, could you give us names that you're looking at?
In terms of correction, I think IT is a better place, because if you have the 12 to 18 month perspective, then I think IT could do reasonably well. So I think among the mid caps, I like a Persistent, which is in my portfolio. Then I like, I think that even Tech Mahindra and HCL Tech have fallen to prices where you can look at them. I think KPIT Cummins has been beaten badly out of shape and almost a little overdone, so oversold. So I think KPIT is another good stock to look at.
And auto stock?
Auto stocks within the two-wheelers, I like a Bajaj Auto, I like a TVS Motors. And within the four-wheelers, I like an Ashok Leyland, I like a Tata Motors.
I'm looking at your portfolio right now. There's no auto stock in it at all. Would you be adding?
Yes, but I think I have some interesting mid caps, and some of the stocks like Persistent, perhaps has corrected quite a bit. So if I had room, I'd probably add to Persistent at this price point rather than get into a fresh sector.
Sharmila, let's answer a couple of questions. Suparna has written in, he has over 4,000 shares of NMDC, bought at 132 and sale at 63. Should he hold on to both of those stocks? What's your call on both of those stocks now? Hold them?
I think so, because NMDC actually I quite like, but we've seen globally that iron ore and mining as sectors have been weak, and pricing there again has been weak. But I think domestically the situation is improving in terms of policy, etc. So I think it makes a lot of sense to hold on to NMDC at this point in time. And I think similarly for SAIL, because it's not that I'm very positive on SAIL in the sense that I'm more positive on an NMDC than I'm on SAIL. But I think this is the wrong price to actually look to be exiting SAIL. So I think if you have to exit SAIL, let it go to a price of closer to 80 and then revisit it and take a call at that point in time.
Well, Swaraj has written in 600 shares of Ashok Leyland at 59 rupees. Should he hold on to that stock? Let's pull up the stock and take a look at it. It ended the week, if I'm not mistaken, at around 72. You have the stock in your own portfolio as well. Hold on to it?
So I think obviously yes. And if you saw their sales numbers for the month of June, very strong set of numbers there. And I think the other factor in the favor of Ashok Leyland is that we've seen CV cycle turn after a long time, and when the CV cycle turns, then it's not like a 1 or 2 months sort of a phenomenon. Then it's a slightly longer good phase for CV sales. So I think that also supports Ashok Leyland to a great extent. I think the only sort of worry or caveat that I'd give the investor is that this stock has really moved from almost a 20 level, then we saw it go to 40, spend some time there, then we saw it go to 80, correct to this level, and again I think it's going to spend some amount of time there before it gets the next leg up, because I think some of the positives of the current numbers and situation is captured in the price. So for you to really see it move higher from current levels, you'll probably have to stay invested in it for at least a year. So if you're ready for that, then I think yes, Ashok Leyland would be a hold.
All right, hold that stock. Ashwin Mehta has written in, he has 100 shares of HDFC Bank, bought at 1,030 rupees. He wants to know what your target is on the bank right now. The stock ended the week at about 1,074. Do you have a target on HDFC Bank at this point?
Well, not really, because I think that if you are talking of a portfolio making a portfolio, then I think HDFC Bank is a perfect stock to form part of that portfolio. You need to have a large private bank within that portfolio today, and HDFC Bank fits the bill perfectly. So don't take a near-term view on the stock. Just look at the kind of earnings they give. I think for the longest time they had like a 20% growth, which has slowed slightly to an 17-18% kind of a growth. And I'm sure that when markets recover, they will sort of do better than the rest of the pack. asset quality is never a concern. So I think just don't look at it as, what is your target sort of a thing, but just stay invested in HDFC Bank.
So it's sort of a core staple in the portfolio.
Absolutely.
Yeah, you should just hold on to it. Okay, now it's time for us to ask Sharmila for her recommendation, and she was kind enough to pick a stock that she believes will help our portfolios at this point. She's picked DCB Bank. That's on your screen right now. Sharmila, tell us why it makes your list.
Because I think of the kind of earnings they've been giving. I think if you look at the last 2-3 quarters, then you see that the bank is on a good growth trajectory, whether it is the profit, whether it is the NII. Again, I think asset quality is very stable. They had some SME bad loans which they sold to an asset reconstruction company. So slippages have been contained as a result of that. So very prudent growth strategy, and I think even in the kind of markets that they're planning to get into, they've given that a lot of thought. So I think that going ahead, as I said, for HDFC Bank, when conditions really improve for banking as a sector, you could see this bank in fact give better results than it has in the past, which is saying a lot because they have had a 30% kind of a growth.
Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Sharmila Joshi is with us, helping us figure out a strategy for our long-term portfolios. Let's take a look at Sharmila's own portfolio. Now, this was designed on the 9th of January, where she revamped her entire portfolio. It's currently at an overall gain of nearly 5%. These are the stocks in her portfolio. She's outperforming the Nifty by about 3% right now. There's Thermax, SKS Microfinance, Berger Paints, Havells, Lupin. It's up 33%. Tata Steel is up 24%. Century Plyboards is up 14%. Ashok Leyland, ICICI Bank, Persistent Systems. Now, we talked about this a little while ago. Persistent Systems down 33%. Do you want to add more to this stock at this point, or what do you want to do with it?
Yeah, but the only problem is that I don't want to sell anything else that I have. So I think I'll just kind of hold on to what I have. But yes, I still believe in the story, and we've had some downgrades from the management as far as earnings is concerned. So I think we'll probably see a bad phase for the next couple of quarters is what I reckon. But I think you will see the stock recover after that. So I think in the interim, if I get a chance, I'll probably add some more.
Okay. It was very interesting. 2 weeks ago, the Prime Minister announced his Housing for All by 2022. And I would have expected a stock like Berger Paints to really react to that, because when you're talking about that level of construction, 2 crore urban homes being built over the next 5 years, then also, while, the real estate sector would expect some sort of reaction, there's a lot of ancillary stuff. So the tiles, the paint and stuff like that. When do you expect that sort of, overflow, waterfall sort of reaction to come into the ancillaries?
Well, I really think it's going to be more result-oriented than that, because I think the stocks which had to recover, sort of react to that news have reacted, and I think I have 2 plays there which could be sort of proxy real estate. I have Century Plyboard as well as Berger Paint. But I think Berger Paints will probably react more if crude stays in this range, and then you will start seeing the improvement in their margins. So I think it's going to be more result-led than really any theme-led.
So actually, I'm going to ask you a slightly tangent question at this point. So as investors, we read about a lot of these government announcements. Let's be honest. There's a lot of PR-led government announcements happening right now about, either whether it's the IT sector and what they're planning in that sector, or whether it's the housing sector and what they're planning. So if I'm making my choices on what to invest, should I take a cue from what you said and just go purely by earnings, just go purely by what's actually being shown on paper, rather than for plans that are being made for the next 5 years?
I think you'll have to combine the two, because if you hear that, for instance, this whole Digital India, whatever, so you may not see an outright order coming to a company, but obviously you see the thrust that, that this is the way going forward. Or for instance, when we heard of defense orders, it takes a while before it actually translates, where companies also actually ramp up to the level that they can start making defense equipment. So, you take a guess as to which could be the possible companies. So you need to sort of combine both. And then we will see that orders will start coming. I used to recommend another stock called Vatek Wobig, which is in water purification. So I think, that Clean Ganga is going to be a positive, multi-year positive for the company. But I don't think any order has materialized yet. But that was one of the reasons why I chose the stock.
Let's take a look at Sharmila's portfolio one more time. There's Thermax, SKS Microfinance, Berger Paints, Havells, Lupin, Tata Steel, Century Plyboards, Ashok Leyland, ICICI Bank and Persistent Systems. Now, while we're going through that list, I'm going to run it one more time for the viewers who are writing it down. In your portfolio right now, what is co-holding and what are the stocks that you're holding because you might get good returns out of them?
The earlier portfolio probably had more sort of core holding sort of plays. But when I changed it, I've sort of bought a lot of stocks which I think will do well in the current environment. I think from this list, probably maybe a Lupin because I like pharma, ICICI Bank, and I think Tata Steel. I think these could be the stocks that you could say are part of your core holding.
All right. So that's Sharmila's portfolio. It's on your screen right now. And remember, if you have any questions about it, feel free to write to us. Sharmila comes back into the studio every couple of weeks. So the next time she's here, we're going to ask her your questions. And here are some questions that came in for her. Suman wrote in. He says he has 100 shares of L&T bought at 1635 and 100 shares of Maruti Suzuki, which he bought at 3680. He wants to know which of these two he should be holding. Now, given all of the conversation we've had up till now, I'm going to assume you're going to ask him to hold both.
Yeah, absolutely. And I think with good reason, because if you're talking of recovery in your economy, then infra needs to be, capital goods infra needs to be part of your portfolio, core portfolio, and Larsen fits the bill perfectly. And as far as four-wheelers go, there is no better play really for passenger vehicles, listed play than Maruti. And I think it stands to reason that we are going to see a growth in that space over the next 2 or 3 years.
All right, so hold on to both of those stocks. Let's take another question. Vineet Suresh has written in, he holds 1,000 shares of Jet Airways, which he bought at an average of 688 rupees. He wants to know if he should hold on to that stock. Now, there's been so much news around Jet Airways, given where it's ended the week around 270. What would you recommend he does? I mean, these are stocks that we assumed a lot of our viewers sold a long time ago, but here he's still holding it. He's lost a fair amount of the value that he bought it at. What should he do?
So he should have actually ideally sold it earlier when we saw that that bump up and when that whole Etihad news was
being talked about. Yes.
Absolutely, but I think it's not, aviation is not a sector I like, very honestly. So it's too risky. It's very difficult to take a call. So unless he's ready to just suffer the pain more, and I think also at this point in time the reason why I'm saying sell is that there is, an element of an opportunity loss, because you could be invested in something that could actually give you sort of maybe, not maybe like a doubler from here, but definitely better returns than what
yes,
and less risky returns than Jet Airways.
So he's basically wasting time and opportunity by waiting in a stock.
Yes, okay. So I would say exit.
Varun Goyal has written in, he has 20 shares of Finolex Cables and he has 130 shares of Century Plyboards. He wants to know which of these he should hold on to. We talked about plyboards. You said hold on to it. It's sort of a proxy for all of the construction that's happening in the country. Finolex as well?
Yes, I think so. I think a reasonable sort of a mid-cap stock, and once again, with everything that you spoke of earlier in terms of whether it's infrastructure, smart city, whatever, I think for Finolex Cables also there is still a lot of business that they can get. So yes, I think both stocks to my mind are hold.
Welcome back. You're watching All About Stocks and ET now. Thank you for staying with us. Sharmila Joshi is still with us, and we're figuring out a strategy for our long-term portfolios. Now, you know that every week we pick the portfolio of one lucky viewer. We take a look at everything you're holding. Anup Kamath is our lucky viewer this week. He sent us a list of stocks, Sharmila. The first on his list is Claris Life Sciences, which he bought at an average of 295. That stock's a little lower than that right now. But we've had conversations about this stock in the past, and I know you are slightly bullish about it. Hold on to that stock?
Yes, I think that it's unfortunate that it's a little lower than his buying price. But I think that, these businesses sometimes, it just takes like a couple of things and, things could change for them dramatically. So I think for the bit, just hold on to Claris Life.
Well, interesting second stock on his list, Glenmark, which he bought at 559 rupees. That stock is nearly doubled from where he got it. Hold on to that one as well?
Absolutely. I think that within the mid-cap pharma space, this is a good stock to be invested in, and so I think just stay put.
Well, the rest of his portfolio seems fairly strong. He has 10 shares of Bharat Electronics, which he bought at 22.96. Again, that stock is, above 3,400 at this point. Hold on.
Yes, I think here we've had a good set of results, as well as the fact that, this whole talk that, we were talking of earlier, FDI in defense, etc. So that could all play out very positively for Bharat Electronics. So with keeping all the future projects that could come their way in mind, I think definitely hold it.
50 shares of HCL Tech, which he bought around about 800 rupees. Now, we talked about the IT sector. You did say that the corrections that you've seen so far, you think that it's a good opportunity to buy into IT. So with HCL Tech at this point, should he be adding to his portfolio?
I think just stay put with what you have, because the other stocks have actually corrected more. I think we've seen a bigger cut like in a Tech Mahindra or a Persistent or a KPIT or some of the other Medicap play. HCL Tech has corrected, but it hasn't come off that much.
Okay.
So just see the quarter numbers, and overall, I would have a target of closer to 1100, 1200 on the stock, in that range. So stay put in HCL Tech.
Pidilite, he also has at 499 rupees. Hold on to that stock.
Yeah, so this is another proxy play, and a good name in that. So I think stay put.
Actually, this is how we tell what the buzz is, because the questions that we start to get, at one point in the market were all about IT and pharma, and now they're about infra and real estate and all of these sort of proxy plays for construction. One last stock, he has 10 shares of Tata Steel, which he bought at 502 rupees. You have Tata Steel in your portfolio as well. Would you recommend he holds on to it?
I think so, because, this would be completely the wrong price. There are a lot of concerns on Tata Steel. We had a bad quarter number, then there was that whole strike situation that was playing out, which seems to be getting resolved. And again, I think global markets are nothing to cheer for, as far as the metal play goes. So if you see recovery, especially in the global scenario as far as metal prices are concerned, then I think you will start seeing Tata Steel or metals as a whole, as a sector, start doing better. And I think that's when you should really time your exit, and not at this point in time.
All right, Sharmila, many thanks for answering those questions. I am required to ask you for your disclosures about the stocks we just talked about.
Yeah, I think it's safe to assume that I could be having exposure to some of the stocks discussed.
All right. Thank you so much. So it's always a pleasure to have Sharmila Joshi in the studio, and I promise you she will come back. So if you have questions for her, please feel free to write to us. Our email ID is on your screen. You also find a copy of this show on our Facebook page, and you can reach me, as you always know, personally on Twitter. Thank you so much for watching.